A new survey of the C-suite revealing that while CEO confidence improving, executives are still cautious about the state of the economy. For more, I want to bring in Dana Peterson, chief economist with the Conference Board. Good morning to you.
Good morning.
So what do you think of that? I mean, tell us about the survey and tell us about sort of how you think the CEOs are really thinking.
Sure. This is a survey of over 100 and close to 150 executives from Fortune 500 companies, and they are less pessimistic than they were. The gauge moved from 42 to 48. 48 is just below 50, and 50 is a threshold where they're neutral on the outlook. Fewer expect that there's going to be a recession going forward, but they still think that something bad is happening around the corner. And notably, they are positioning to prepare for that when it comes to CapEx.
And so when you think about that confidence in terms of recession, non-recession, where do they land?
Well, they're still landing in the recession category, but they still think it's going to be short. It's going to be shallow. And the interesting thing is that they're still really hyped up about the labor market. They're still saying that they're having difficulty finding qualified workers. They're still planning to raise wages, and they're still planning to hire, very shockingly. Roughly 40% said that they're going to continue to hire, and 40% are holding on to workers. Can you explain?
I want to talk about the workers, but explain the recession piece, because when we talk to CEOs on our broadcast, most of them say they don't feel a recession now. They don't really see it, but they think maybe. And I don't know if you think it's like a group think because they just think it's possible, or because they actually see something in their business that suggests to them there could be a problem.
Well, I think it's going to be very industry specific. So some industries are already in recession, right? So the tech sector has been dialing back on workers. Not all of them are necessarily collapsing in terms of earnings, but they're still looking at a very dim outlook with respect to demand. The financial sector has been struggling with higher interest rates. They've been letting people go. You also seeing some strains in the residential construction sector. So I think it really depends on who you are as a CEO.
Going back to the labor issue, though, they see no signs of wage growth slowing.
Exactly. In fact, most of them are still anticipating that they're going to need to raise wages by more than 3%. The good news is that fewer think it's going to be more than 5%. But still, in all, rising wages is just not the direction that the Fed wants to see wage inflation going, because it feeds through to consumer inflation and makes their job harder.
Are you surprised at how strong things have held up? I mean, just look at that ADP report yesterday. You'd think that we're going to have a hot number tomorrow.
Well, I think, ADP and the payrolls report are, very different subsets of surveys and in terms of how they're measured. So I wouldn't compare one to the other, but I still think we're going to see healthy gains in payrolls. Again, because businesses are still hiring, especially those businesses that need workers to come in person, such as manufacturing and construction, especially on industrial construction and infrastructure construction. And we also see that there are businesses that are trying to catch up in terms of finding labor, such as healthcare and leisure and hospitality. So we're probably going to continue to see gains. You're not going to see the labor market slow materially until GDP starts to slow.
Well, that was going to be my last question, which is, and it's the talking point in the morning, Bill Ackman with a fascinating Twitter thread last night saying he thinks inflation is going to hold at 3%. He thinks there's just no way it goes down to 2%. As a result, he thinks there's a great hedge in terms of how he thinks about treasuries. Where do you think inflation really is 12 months from now?
Well, 12 months from now, it's probably going to be around 2.5%, edging towards 2% by the end of next year. The big issue is rents. Rents are going to come off soon, but we don't know how long that's going to take. And so that's going to be what causes inflation to come down even more slowly, as well as potential for continued consumer demand being healthy.